What does Bitcoin's monthly chart reveal about where we are really headed? Welcome to this week's Bitcoin price action analysis. My name is Josep Capó, and I am a trader and an author for the Brooks Trading Course website. July is over, and the monthly July candlestick is over too. And as always, we are going to discuss what this candle means within the overall context. The first critical aspect of the context that we want to look at, it is that Bitcoin had a spike and channel bull trend. The bull trend was extremely strong, and then we had a bear breakout of the lower trend line of the bull channel. Normally, after a strong bull trend and a bear breakout of its lower bull trend line, there is an 80% chance that the price will transition into a trading range structure rather than into a bear trend. Therefore, we expected a couple of legs down. However, the bears put the market always in short by probably this fourth bear bar here. And then after this fifth bear bar, we considered that bears were very strong. Or also that also means that bulls just went out of their trades, or they took profits around here because nobody wants to sell at the highs, right? Therefore, this high momentum bear breakout it was somehow surprising. The surprise comes in the form of a strong micro gaps here. So micro gaps are three bar patterns, and when the three bars, in this case bear gaps, are bear bars, they are kind of stronger instead of weak. Then these combinations, they bring us a strong bear micro gaps, and strong bear micro gaps lead to tests lower. So they open the possibility of lower tests. Of what? Of any price level. Like, for example, in this case, the low of the last bull leg, which is always the first target after a wedge top. And then ultimately there are other goals. So the low of the wedge top, it is another goal for the bears. That goal is usually filled within the trading range price structure. However, when there is a bear trend, it is considered that the bear trend is in place when there is a closure of the whole bull trend. So that will mean that after a bull trend, if the price tests back down to the bull spikes low, then that would mean that there was a bear trend too. And therefore, for this 20% chance, initial 20% chance of a bear trend to succeed, it means that the price eventually will test, or that will be accomplished once the price tests the low of the bull spike. Moreover, after this strong bear breakout, then the probabilities of a successful bear trend have increased. And I would say that there is a 40% chance now of testing this low, the low of the bull spike, which is around $20,000. So I don't think that's the main scenario now. I think that there is still a 60% chance that this will become a trading range pattern that we are going to keep discussing the monthly chart now with other price action features. So, but with this kind of bearishness, the chances of a bear trend increased, but probably not yet enough. On this slide, we can see the latest price action. Within this bear breakout, there was a high 1. This inside bar becomes a high 1. This other inside bar creates, it is a high 2. And July is triggering a bear breakout signal bar here, but it becomes a bull reversal closing at or above its midpoint. It is a clear bull body, and that's a high 3. That means that there is, or it is some kind of third leg within a strong tight bear channel. And third legs are usually leading to a couple of legs sideways to up. However, since the price did not trigger, or August just began, and the price did not trigger the high 3, then this bull signal bar, the high 3 bull signal bar, is not yet in place. So for the signal bar to be effective, the price has to trade one tick above the high 3. So if August trades above July, it's a high 3 bull signal bar. Then the most likely outcome will be the closure of the weak micro gap, as we have discussed before about the strong micro gaps. Now we are saying the opposite on weak micro gaps. Weak micro gaps lack institutional support for a strong breakout, and they are highly vulnerable to being tested and filled. And therefore, if the high 3 triggers during August, the micro gap will likely be closed. Moreover, the chances of another leg sideways to up testing both this minor lower high or the major lower high around 100,000 will increase, and hence the possibility of a leg up. After a couple of legs down, one leg down, maybe two legs down, there is an increased chance of a bull leg if the market is in a trading range. And we have said that the market is probably, by probably, it means 60%, which is not at this point high. So at the point of the breakout of the lower bull trend line, bear breakout, there was a high chance that the market will become a trading range, but this is a strong bearishness. Now the strong bearishness after a bear breakout of this low but follow through starts to, or we can say that there is a lower momentum, but it has to be confirmed at least by triggering above the high 3 and by a closure of this weak micro gap, and also with bulls need a close above this bear bar to close the body gap. So now there is a bear breakout, and if we only look on closing candles, not candles, in closing prices, then that means that this is still the price, the closures are below this lower low. So bulls wants to close this gap, they want to close above this bear bar, and that will increase significantly the chance of testing these upper targets. We have to remember that this bear breakout never tests above, or never tests it tests the breakout point but never reached the breakout point, neither this area. Within this area there was overlap, there was equilibrium, there was buyers and sellers participating within this market, and hence that means that there are bulls that bought here and then they are trapped. Then there is this gap open here around the 100,000 level, and whenever there is a gap, I always say that the market moves fast, either for a rejection or a successful test. What we call in the Brooks methodology is successfully testing the level and quick rejection, or going through the level. Even if the price breaks through this level quickly, then we'll have to face a lot of pressure from bulls that are currently trapped, and they will see a chance to sell their bad positions, and they are considering right now that their timing was pretty wrong, right? So now they are convinced that this buy around here was pretty bad. So I don't think that they will miss the opportunity of exiting their bad positions here. That means that there will be sellers, at least from sellers that are that are buyers that entered wrong here, and that will at least add a layer of selling pressure. Then what I believe is that the market will reverse up at some point here, maybe even after testing the low of the wedge top. Maybe after testing here, the market will likely, in my opinion, reverse higher, because there is a higher chances of trading range yet. So I don't think the price will come here for now. So I think that the price will reverse up, but if reverses up, then I think that it will either reverse around this area and create a contracting pattern like a triangle, like the price will compress here and create a triangle. Or if the price goes through this level, I don't think there will be a successful breakout, and then this may become an expanding triangle pattern, and the price will eventually fall within the trading range, or this presumably trading range area where there is more volume, and that's normally in the middle third, and the middle third it's likely going to be between $100,000 and $80,000. Before going into the weekly chart, I would like to encourage you to do the Brooks trading course. If you do the Brooks trading course, you are going to take independent trading decisions, and that's critical. You are never going to be a successful trader if you don't have your own trading system, or if you follow others' advice or ideas. Our job as price action analysts here in the Brooks Trading Course channel or at the blog, it is to fill gaps into your understanding of price action. But our goal is not to give you any trading signal. It is to give you different perspective to improve your price action skills. As I repeat week after week, I have spent thousands and thousands of dollars in trading education. I have done a financials market master's degree. And if I would have to come back and just select one thing to do, it will be studying the Brooks trading course again, which costs a tiny fraction of whatever else I did. Please find the link in the description of this video and join our community of traders. There is a 30-day money-back guarantee, no questions asked. So we are sure that the educational proposal here is genuine, and you don't have any excuse to do not join our trading community. You will find within the Brooks Trading Course website all the resources that you need to become a price action trader. In the blog, you will find many different perspectives of price action students that became professional traders, and in the Learn to Trade tab, there will be a lot of information about how to become, what's the roadmap that you can take to become a professional price action trader, along with Albrook trading wisdom. If you are serious about trading and you haven't done the Brooks trading course, seriously, I don't know what you're waiting for. Finally, let's go to discuss the weekly chart. The weekly chart, we have been analyzing the weekly chart, and we have said that we are probably on a third leg down here, which this is a truncated wedge bottom, and that the price left here a weak bear micro gap. Now we have said that there was a low probability but a bull signal here in this bull candle that was a high too, that is now threatened by this bear bar. Now this bear bar comes after a double top. Bulls tried to close above this bear candle, they couldn't, but still it is a double top, and this bear bar, it's a low one, and this previous week bull doji, but bull bar, is a week double top. It is a low to bar because this week triggered below previous week's low. So that make this bull bar, this doji, a low to, and it's not a great sell signal bar, right? It is a third leg in a bear channel, is near the lows. After a strong bear breakout, the price fails. After another bear breakout here, the price fails again. So I don't think this is a good low to signal bar to sell. Still, this can, or this might lead to a vacuum test of $50,000 level, and also this the trend line, this wedge bottom, or this measured wedge bottom of this, or this trend line test. So it can vacuum test here, but I don't think that this is something that bears would like to trade. I think that bears should feel that like they are low in a trading range, low in a bear channel, and they should either try to sell higher, like for example around a double top here, or after a longer trading range, rather than selling here, which seems like selling low. It is a common mistake. If you are trading like this on your daily basis, you will find out that many times it is better to do not sell too low and do not buy too high. 80% chance the market is in a trading range, and that means that you are going to be shaked out 80% of the times that you are betting for a trend continuation in the wrong place. And that sounds like silly, but it's actually a very common mistake of beginners. So they lose a lot because they put themselves into a bad situation. Sometimes this will work, and that means that 2 or 3 times every 10 times, which is honestly not it is more than what people think, but it is very hard to exploit this kind of edge, right? So the best thing it is to stay away from the on the bear side, and probably wait for a bull reversal in this context, or wait for the price action to build a trading range, and then yes, it would make more sense a bear trend continuation, or a bull breakout of that eventual trading. So I believe that bulls will eventually close this weak micro gap, so they will test again above the $70,000 level. And I think that if they want to do it soon, they need a bull reversal. So I think that this is a bad double top, and that there are more buyers than sellers below this candle. However, I'm not this kind of trader trying to now buy here, because I know that a trader that is buying here is using a wide stop and will likely scale in. There are this kind of price action traders, but I am more of a breakout trader. So what I will prefer, it is a bull reversal and follow through, and then I will likely bet for this on this high, so the market to return to the high of this bull leg, or even another second leg sideways to up. Next week we are going to come back with the daily chart, but I hope that you enjoy to see the long-term ideas on this video and how the Bitcoin will likely evolve within the next year or two. Thank you so much for watching, and I hope you are enjoying your summer. I am back from vacations next week, so you will likely see again in my trading studio. Wishing you a lovely week ahead. Thank you again.